From Kansas State University, this is Agriculture Today. I'm Jeff Wichman. It's Friday, and that means a check of the activity taking place in the grain markets with K-State grain market economist Dan O'Brien. As part of our extended conversation today, Dan not only recaps the current market trends and prices, he also looks at what factors could come into play when the WASDE report comes out on the 12th. While he says we will gain some information, we'll get more information from the reports that come out in September and October. Also, today's news headlines, including this week's Wheat Scoop, and K-State climatologist Mary Knapp passes along the weather data from a cooler, drier July and provides the weather outlook heading into the fall. It's all just ahead on Agriculture Today over the K-State Radio Network. This is Agriculture Today. Well, we start off this Friday edition with our weekly check of the activity taking place in the grain markets with K-State grain market economist Dan O'Brien. And today we have an extended conversation with Dan because the next World Agricultural Supply and Demand Estimates, or WASDE report, comes out next week. In this segment of Agriculture Today, Dan takes a look at where things currently sit in the world grain markets, as well as what to expect in the months ahead. He says that the WASDE report that comes out on August 12th will provide some indication of what producers can expect. However, the reports on September 10th and October 12th will most likely provide a much better picture of the global supply and demand for grain. Dan, first off, maybe just the overall situation of the markets. Where do we stand right now?
I think we're observing what rainfall amounts will possibly be for the rest of August and early September, but particularly now for the rest of this month, and are wondering where our final yield numbers will come out at. Well, in terms of the size of the U.S. 2021 corn and soybean crops. Questions also, of course, on size of grain sorghum and what remains of the U.S. wheat crop to be harvested, largely up in the spring wheat area and on into Canada. So we're in the mode where we're anticipating that we'll have pretty high prices relative to historic comparisons. And in doing that, we're wondering if a crop surprise that could come in, and such as in the USDA crop production and WASDE reports, that'll be released on Wednesday, the 12th of August, if there'll be any appreciable change on the supply side that would affect that. Now, my own thought, Jeff, is that the USDA, when they pull in their August report numbers, officially they are taking account of farmer surveys. They may look at some satellite information. They're not officially bringing in their own enumerated plots. I wouldn't doubt that they have some idea what's going on at them. But the larger effort to go out in the field themselves and actually measure samples will come in the September reports, September crop production WASDE reports. And the dates for release of those, I believe, on the September report, that will be on the 10th of September, then the October 12th report, November 9th, and again December 9th. So I'm thinking that the times of really the most volatility where we'll actually get the all that much more of a close-in observation on what the size of the 2021 U.S. corn, soybean, grain sorghum, cotton, and also the spring wheat crops will probably come more in the September reports. There is a September 30th, end of the month, small grains report that will catch a lot of what's going on in wheat, and those numbers are generally relied on going into the following reports in October. But you know, it's a time where we've gotten through most of the summer. We have dry conditions that have developed in the northern plains, and it's sort of a balancing act between what we anticipate to be crop damage in the Dakotas and maybe to a degree in the northern part of Iowa into Minnesota, some into Wisconsin. A balancing act between that and what appear to be really pretty good conditions in general for the rest of the Corn Belt. We've had some dry conditions and some stresses for sure at times here in the western Corn Belt, but the central and eastern parts of the U.S. Corn Belt are really looking pretty good.
When you talk about volatility, are you talking wide swings, or what makes up volatility?
Well, I think on the day of the report, volatility would be a price that would change dramatically at the end of the day after the numbers are out from what the prices were ahead of time, ahead of those reports being taken out. I think for the corn market, are we looking at, it looks like expectations are for something around 14.8, 14.9, 15 billion bushels for a corn crop this year. There are pre-report estimates that have come out already projecting U.S. corn yields, some as low as 176 bushels per acre. There was one that came out a day or so ago at 180 bushels per acre. So given the planted and anticipated harvested acres that we have, it's looking like we're probably looking at this time, a sizable U.S. corn crop. Again, something that would surprise the market on the low side would be 14.6, 14.5 billion bushels. Then ending stocks with anticipated usage would be pretty tight, heading closer to 1.2, 1.1 billion bushels. And with that, then you've got volatility, as you mentioned, and corn prices that USDA has projected for instance, in the July WASDE report, the USDA projected U.S. corn prices would be about $5.60 in the new crop marketing year starting September 1st, with ending stocks of 1.4 billion bushels. Well, something in the corn market that would be volatile would be to shave 1 or 2 or 3 or 400 million bushels off of that. Then you'd see prices probably move higher from that 560 area. So, as we've been talking, Jeff, on the feed grain side, we've been focusing on supplies. There are questions on the usage side. I have seen analysis, done some on our own, that would show that we'll probably see the USDA shave back their old crop estimates of exports, just as the pace has fallen a little bit short of their expectations. A likelihood that also the ethanol usage numbers may be shaved back some, and again, all that coming into play ceteris paribus, everything else being unchanged. Well, we would see larger supply-demand balances and prices ending up having some weakness. The projected price for that last marketing year is at $4.40 per bushel, a lot of that based on lower prices at harvest. So even if they make those changes on old crop, that'll have some effect, but the bigger changes, the bigger issues that could move the corn market around and also affect grain sorghum as well would have to do with the size of the crop. I would say here in Kansas, of course, grain sorghum is a crop of great importance. At this time, unless hot, dry weather in different areas has ended up during pollination and done more damage than thought at this time, it would seem we have a decent crop coming. And the anticipation that export demand will, even though it's slowed here the last several weeks, that it will continue on into that next marketing year. And the projected price for grain sorghum for the next marketing year is $6 a bushel by the USDA. If you have corn at $5.60 and grain sorghum at $6 per bushel, then you're basically counting on exports to drive it there. And kind of an overall overview, then you look at where we're at in the soybean market. And again, a key reproductive time for soybeans is right now during the month of August. And I guess the geographic delineation of where we're concerned and where we're not concerned in the U.S. Corn Belt really follows in lockstep with the corn market. At this point, I don't see a lot of analysts, university types, or private putting out numbers that are anticipating major drop-offs in U.S. soybean production. In fact, the general idea is that what's lost in those northern states probably be gained by pretty good conditions in the southern states. So generally, the prices that are projected for U.S. soybeans, as you look into that next marketing year, also starting September 1st, $13.70. And generally very tight stocks to use. A lot of that, of course, predicated on strong export demand, like China in particular, but some other countries as well. Pretty strong crush. So not really the anticipation of any major surprises yet in the soybean market. So I think we'll talk later on some of the particulars of these markets, but at this time, even with the market anticipating generally okay to pretty good crops coming in, the combination of all these factors of usage on the world stage has led us to prices for D's corn prices closing yesterday, Thursday, August the 5th, at $5.53. November beans at $13.28, and even D's hard red winter wheat futures closing at 703. So just really kind of an amazing time. So we're anticipating decent to okay crops, and yet prices that we haven't seen for a good while.
That's K-State grain market economist Dan O'Brien with information regarding the projected supply and demand for grains and what we might see in the August 12th WASDE report. When Agriculture Today continues, Dan discusses the current trends and prices for corn, sorghum, soybean, and wheat. And while we have a moment, a reminder that Dan will also be providing a grain market outlook during the annual Risk and Profit Conference being held in person August 19th and 20th at the K-State Alumni Center. It'll also be available online daily from noon until 1:30, August 23rd through the 27th. K-State agricultural economist Rich Llewellyn says a leading risk management consultant, Matt Roberts, is the keynote speaker for the conference, and that he'll cover the topic of markets in the long term.
Well, he'll be talking about the grain markets in a longer-term sense. A lot of times our outlook talks look at the next year or so and what's going on. This is looking a little further down the road, trying to discern, what some of the long-term trends might be, with trade and some of those issues, as well as where things might go in the energy market and their effects on the grain markets. So Matt has been in academia, but he's also been involved in the consulting and speaking world for quite a while now, too. And so does his own research, and it'll be some interesting stuff.
The conference also provides the chance for attendees to hear from a top Kansas agriculture producer. This year, Joe and Dana Newland from Southeast Kansas will be featured. And it isn't too late to get signed up for the conference. If you register by August 13th, you'll get a break on the registration fee. To learn more, go to agmanager.info. This is Agriculture Today. Welcome back to Agriculture Today over the K-State Radio Network. I'm Jeff Wichman. We continue our extended look now at the grain markets with K-State grain market economist Dan O'Brien. In this segment, Dan takes a closer look at the current trends and prices for corn, sorghum, soybean, and wheat.
International factors have come in and affected the wheat market without question. News out of Russia from market analysts, from governmental sources, that dry conditions have come in and affected the development of that crop. Generally, the problems that they've had in Russia have extended over into Kazakhstan. It's been interesting in the last year or so that Russia in the Black Sea region would have some problems, but Ukraine seemed to have been missing it. Of course, that can shift around pretty quickly, but those problems and the problems that Canada has had with their hard red spring wheat crop, which of course have come down into the Dakotas and in Montana, well, they're, quote, a big deal. And when you see the trend in wheat prices, again, even though we have had, when I say we, are talking about the Southern Plains, Kansas, Oklahoma in particular, have had a pretty good hard red winter wheat crop. Still, we're looking at prices that closed yesterday for hard red on the September futures contract, $6.91. That follows a run-up that we gotten up to about $7.20 within the last 2 or 3 days. Around the 1st of March, we gotten up to about $7.50. So strong prices, cash prices for wheat in the state, also strong. When you run from Colby at $6.63, Salina $6.76, Topeka $6.86, Garden City $6.75, Hutchinson $6.76, Columbus, Kansas $6.53. Again, so often we come out of harvest and we're looking at prices not uncommon to see at least $1, if not $2, or sometimes $3 lower than that. So strong prices. At the same time that we have those strong prices, our exports are doing, quote, okay, but not just tremendous, at least not yet. The latest export numbers for this marketing year, which started June 1st, for the week ending July 29th, we actually shipped out about 14 million bushels, need about just under 18 to reach the USDA's projection. So I think it's just the strength we see in wheat is just indicative of the very, very tight supply-demand situation. And yet, in aggregate, it shows, strong near-record high ending stocks. But if you take China out, things look a whole lot tighter in terms of the supply-demand numbers. So I guess I would say that so much is affected by the hard red spring wheat crop's weakness up in the Dakotas and on into Canada, that it's having a carryover effect upon us in hard red country. It's a worthy question to ask as to how the tightness that they have up here will affect what millers do. Where they go for supplies is they take our crop for hard red winter wheat, which was generally an okay crop, but in some cases a little weaker for proteins, what we understand, and then look to blend higher protein hard red spring wheat or any high protein wheat hard red winter they can get down here together to make acceptable wholesaler baker products from the flour that they get. To me, that's sort of the battle that's going on. We have some wheat feeding that's been going on during the summer months, but when we do get the feed grain crops coming in, then you would anticipate that to fall off pretty quickly as feed grain supplies be available. So for wheat, we have strong prices, Jeff, and really not anticipating any major change in that as we head off into fall. Again, as we just said, some of the support coming from feeding wheat will go away, but the tightness of exportable North American supplies is really a positive thing for the market.
Switching then to corn and sorghum, what can we see there?
For corn, prices have been moving sideways, basically. We've been running, quote, at about $5.50 to about $5.60 for about the last week or so and a half, and had come off the highs that we had seen at $6.50 a couple times in early May, came again in early June to highs, jumped up again. So it's been a very, as you mentioned, volatility earlier on today. It's been a, quote, volatile market with some swings of basically from $5.25 on the lows to $6.50 on the highs. So a lot of volatility. We're sitting now in that range at about $5.50. So I think it's fair to say, and that's with September futures, it's fair to say that if we don't see major cutbacks in the estimated 2021 U.S. corn production, and if we stay at moderate to decent levels, we could, by the time we get to harvest, see prices closer to $5.25, heading towards $5 for corn, especially if we actually do get a 15 billion bushel corn crop out, even after all of this. Again, that could come about. The ongoing support, though, in the corn market, I think, is coming from problems overseas. What had been a late-planted and somewhat dry Brazilian corn crop has fallen prey to some frosts that have come now for 2 weeks in a row and has cut back not just on the margin, but significantly the size of that second Brazilian corn crop. And you see some draconian statements coming out of Brazil talking about how they're anticipating that their exports will be, quote, cut in half. Whether it will or not, we don't know, but those type of statements made by people in country tend to lend support to the market. In fact, that the market hasn't responded to that in the last few days with tremendous volatility to the high side is indicative of, I think, a wait-and-see attitude. On grain sorghum side, we've been running at a pace of exports that have been so-so, but not necessarily high enough to meet the USDA's projection. The USDA had projected about 305 million bushels of grain sorghum exports for this old crop marketing year that we're in. That'll end on August 31st. And right now we've actually had shipments of about 260 million bushels, bought ahead about 280. So it's likely that by the time we get to the end of this market year, it might not be till the September report, that the USDA will probably have to adjust back those export numbers for grain sorghum and then again take a look at what they anticipate for the coming year. Still, to me, it's been really interesting to watch how the forward contract prices for grain sorghum have held strong, whereas corn forward contract prices yesterday in Colby, Kansas, the highest bid I found is about $5.43. For grain sorghum, it's 40 cents higher at $5.83, and that same differential holds in the Salina area, even more so in Topeka, more of an export-oriented market. Garden City, about 30-some cents. Hutchinson, about 40-some cents differential. And Columbus, about a 25-cent differential. So even though we've been muted somewhat on the pace of grain sorghum exports, still the industry must be anticipating pretty strong demand to see those new crop forward contracts for sorghum continue to hold strong as they have.
And lastly, soybeans.
Well, for soybeans, we've talked about the volatility for corn. You could almost, but not quite, superimpose the prices since about April 15th for September soybean futures, superimpose that on corn and have just pretty similar pattern, not exact. Again, the highs that we've seen since mid-late April in the September futures contract got up to about $15.10, as low at one time in late May of about $12.50. We're trading now at about $13.35. At least we were yesterday on the close, $13.35 for the September contract. So quite the picture of activity and volatility. Again, at least at this point, we don't hear of many market analysts anticipating that there'll be a major cutback in the size of the U.S. soybean crop. If there is, then that'll be a positive thing. But again, kind of hearkening back to what we talked about in that first segment, we're anticipating that we'll get decent rains from here on out, that the stress that we're seeing in the northern states will be somewhat mitigated by some better conditions in the rest of the Corn Belt, and that may or it may not come about. I guess that the type of a situation we're in is one that is anything but a normal slide down into harvest with lower prices. We're seeing a strong enough demand on the international market for U.S. grains that we still are, even in the face of a 4.4 billion bushel U.S. soybean crop, we're still looking at futures prices on closes yesterday at $13.35 for September, $13.28 for November. So I think if you stand back and look at these markets, we've got an international situation led with the first cause being all the challenges that they've had in China that brought about the need for them to come and be involved sharply and strongly in U.S. grain markets in terms of being buyers of exports. And if we'd have had just tremendous growing conditions in South America, we'd be sitting at probably lower feed grain and oilseed prices than where we're at right now. But we didn't come through in that manner. So you had a strong demand issue hit in Asia, followed by a crop shortfall in South America, and now we're seeing in North America our markets hold up pretty strong as we wait to find out if we'll have any problems more than we had thought. And throw in on top of that the drought problems in the northern U.S. and Canada for hard red spring wheat, and you've got a combination of 3 or 4 things that have all come together to give us just pretty strong grain prices as we sit here today.
That's K-State grain market economist Dan O'Brien with an update on this week's activity taking place in the grain markets. His full analysis of the markets and trends is available online at agmanager.info. That's agmanager.info. You're listening to Agriculture Today. Listening to Agriculture Today over the K-State Radio Network. I'm Jeff Wichman. In today's agricultural news, topsoil and moisture shortage numbers continue to rise week over week. Stephanie Ho has more.
USDA meteorologist Brad Rippey has the latest topsoil moisture numbers for the week ending August 1st.
Not unusual for late summer. We're seeing a big uptick in the very short to short ratings. The current number nationally is 48%, very short to short. That's a 4 percentage point increase from the previous week.
On the other end of the spectrum,
just 4% of the country showing surplus topsoil moisture, and that is a change from last week's 6%.
He notes that the country's most severe dryness is across the northwestern half of the country.
We have really dire numbers across the northwestern half of the country in those drought areas. For the first time in the 21st century, Washington State has hit 100% topsoil moisture, very short to short. Prior to this year, the record had been 89%, very short to short, back in September 2017.
This is Stephanie Ho for the U.S. Department of Agriculture in Washington, D.C.
However, Stephanie reports that the nation's overall pasture conditions are relatively stable compared to last week.
There is little week-over-week change in the country's pasture and rangeland conditions for the week ending August 1st.
The national numbers, first of all, showing 42% of the country very poor to poor, no change from last week, and 32% good to excellent. That's a 2-point drop from the previous week, so relatively steady conditions.
USDA meteorologist Brad Rippey says most of the pastures in good condition are in the southeast.
However, there's another side to this coin, and that is the northwestern half of the country. We see a couple of states coming in above 90%.
Montana and Washington tied for the top spot.
96% of the pastures and rangelands rated very poor.
Meanwhile,
large number of other states across the northern plains and the west coming in at or above 50%. And in fact, that is 9 of the 11 western states, all but Colorado and New Mexico, and the Dakotas and Minnesota.
This is Stephanie Ho for the U.S. Department of Agriculture in Washington, D.C.
As reported by DTN, a central Illinois corn farmer will make a $24 per acre profit in 2022 after paying for inputs and land costs, according to the latest crop budgets from the University of Illinois. The return on soybeans fares better at $150 per acre because fertilizer, seed, and drying costs for soybeans are projected to be $226 per acre cheaper than for corn. As farmers look to negotiate cash rents with their landowners this fall, they're at a distinct disadvantage. Landowners see how high commodity prices have risen this year without noticing how record-high input costs will squeeze profit margins for farm operators. For the 2022 crop year, the University of Illinois projects direct costs for corn in central Illinois to be a record $446 per acre. That's an increase of $56 per acre compared to 2021. As reported in the July 29th issue of Kansas State University's Agronomy E-Updates, winter canola yields attained superior levels at testing sites in Kansas in 2021. The primary reason for the high yields, according to K-State canola breeder Mike Stamm, was ideal flowering and grain-filling temperatures during April and May. Dense canopies filled with an abundance of seed pods and flowering late into the growing season were witnessed at multiple locations. Stamm says the high yields were a positive outcome as we were reminded what the yield potential of winter canola can be when planting conditions are favorable, moisture is not limiting, and temperatures are cooler than normal during the reproductive stages. Stamm says yields in northern Kansas were the highest because rainfall amounts there were greater. National winter canola variety trial sites for the canola breeding program were harvested at Belleville, Colby, which had not yet reported, Garden City, Hutchinson, Manhattan, and Norwich. Each trial is split into open pollinated and hybrid varieties. And in this week's update from Kansas Wheat, Marcia Boswell discusses the benefits of controlling volunteer wheat.
The rain delays and weather concerns that plagued this year's growing season and dogged down harvest progress indicate favorable conditions for volunteer wheat establishment. As a result, Kansas producers cannot let their guard down on controlling volunteer wheat as they prepare for the next growing season, lest they leave open the door for wheat streak mosaic virus and other diseases to survive the winter. One of the best preventative measures for wheat streak is the control of volunteer wheat early and often after harvest. If volunteer wheat is allowed to stand, it creates a green bridge, allowing wheat streak mosaic and wheat curl mites to survive locally. Volunteer wheat should be terminated at least 2 weeks before planting to allow sufficient time for mites to die off. With specific conditions varying across the state, the 2021 growing season included drought-stressed wheat in southwest Kansas, waterlogged conditions in central Kansas, hail damage, freeze damage during late boot, and early heading and excessive rainfall that delayed harvest. Each of those situations might have increased the amount of seed left behind after harvest, which will likely lead to more volunteer wheat. Among other issues, volunteer wheat provides the green tissue that wheat curl mites, which carry wheat streak mosaic virus and other viruses, need as a suitable host. When volunteer wheat emerges shortly after harvest, wheat curl mites can build up rapidly and spread to other volunteer wheat stands that emerge later in the season. In contrast, if early emerging volunteer wheat is controlled shortly after harvest, that will help break the green bridge. Glyphosate and atrazine are common herbicide applications for controlling volunteer wheat in addition to tilling. Producers should apply a second application of herbicide or till to make sure all volunteer wheat is dead within 1/2 mile of fields being planted to wheat in the fall. Producers should complete the second round of application or tillage at least 2 weeks before planting to ensure enough time for the entire population of wheat curl mites to die off. In addition to controlling volunteer wheat in the field, producers can also select varieties with built-in genetic resistance to wheat streak mosaic virus and other severe disease problems. This genetic resistance in these varieties is helpful, but is most effective when used in combination with strategies to control volunteer wheat. By doing so this summer and early fall, producers can stop the spread of wheat streak mosaic virus and other viruses and reduce a substantial limiting factor to next year's harvest. Learn more at kswheat.com/wheatstreak. For Kansas Wheat, I'm Marcia Boswell.
And this reminder to listen to the podcast version of Agriculture Today, visit agtoday.net, or using an app on your mobile device, type these search keywords, Agriculture, Today, Kansas, and you'll find this program. That's agtoday.net. This is the K-State Radio Network. Welcome back to Agriculture Today. Well, we wrap up this edition and the week with our regular check of Kansas agricultural weather with K-State climatologist Mary Knapp. She says that July was a little different this year across the state. Mary, another month of records officially into the book. How did things shape up for July?
Well, it's kind of interesting because we had one of those rare Julys where temperatures were overall cooler than normal, but we also had less than normal precipitation. And usually you can't get the two of those to go hand in glove. Less than normal didn't mean that we didn't have precipitation. Indeed, we had 61 stations that set daily record rainfalls for July, and 3 of those daily records were all-time July records. So again, not everybody was as short-changed as some people, but that came as a mixed blessing. The Southeast Division had the highest average rainfall, over 1 1/3 times what they normally would get, but unfortunately that came as a few heavy downbursts, which created flooding, but then turned off dry, so we still have some moisture stress on the crops there.
So when we have those sudden downbursts, there's just really nothing that's penetrating the ground, really.
Right. The penetration rate, especially when they're in these severe downbursts, may be 1/4 of an inch to start out with, and then it kind of seals the soil over and you get the remainder as runoff. So again, those heavy, intense rain events are not nearly so beneficial as a rain event. That same amount was spread over the entire 24 hours. It could be a lot better absorbed than getting an inch in 15 minutes.
Did any areas get those kind of rains in July?
The long-spelled rains, no, it was mostly daily, fairly intense rain events. So that was, again, not the most desirable component of it.
The cooler temperatures, though, probably help somewhat.
Right. With the overall cooler than normal temperatures, the evaporative demand rates were not quite as high. So we didn't see the intensification in the drought situation quite as much as it might have otherwise. We still had some problems with the temperature. There were 2 very warm spells, one in the middle of the month and one at the end of the month. That was particularly troublesome for crops that happened to be at a very vulnerable window during that time. Corn in particular saw issues where it created problems with the silking, the tasseling, and the kernel set. So that was one of the major problems. Again, some of the later planted crops, sorghum and soybeans, didn't like that very warm end to July either.
Timing is everything with crops, and as you mentioned, not ideal in July.
For a lot of them, there were some fields that hit it just right, and they had the rains at just the timely manner, and those fields are looking very good. But you don't have to go far, and a field that was maybe a week later planted came up at the wrong time and was tasseling at the wrong time.
In terms of what we expect for the current week, how does that look?
Well, when we look at the week that ended on August 3rd, Overall, we were slightly warmer than normal, and we continued that drier than normal pattern. Interestingly enough, the wettest division was in the southwest part of the state. That division had 97% of their normal rainfall, which is pretty good. There were 3 divisions, the northwest, the west central, and the central division, where their average precipitation was 0, nothing. And of course, that has resulted in an expansion of the abnormally dry conditions, the moderate drought, and indeed we now have a small pocket of severe drought in that northwest corner of the state.
So we are headed the wrong direction in those areas.
Right, and actually we're going to be headed in the wrong direction for most of the state. When we look at the quantitative precip forecast that ends next Friday, the overall pattern is generally less than 1/4 of an inch, and that encompasses most of the state. There is a slight area along northeastern and east central Kansas where they may see as much as an inch and 1.25 inches. That would be more than they would typically see in a week, and another week without rain in the western part of the state would certainly not be very beneficial.
As we take a look farther out, what can we expect for the remainder of August, maybe into the fall?
Well, the August outlook is pretty much neutral. They updated it on the 31st, and it basically favors equal chances for both temperature and precipitation. Again, it's a very uncertain forecast which particular pattern will dominate. If the monsoon that has been very active in the west nudges a little bit further to the east, we could see above normal moisture. Likewise, if there's any tropical systems that begin to make their way into the Gulf of Mexico and up through the Central Plains, that could also be beneficial. As far as the temperatures go, if that ridge that has been plaguing the western states shifts a little bit further our way, we could end up with an extended period of hot weather, such as we saw to end July.
Not what we need.
Not what we need. And again, it's very uncertain as to which phase might dominate.
We hear about La Nina and El Nino, so what pattern are we in? Are we not in either one?
We are not in either one yet. They have issued a La Nina watch where it indicates that they expect La Nina conditions, which are, again, the cooler than normal waters in the Central Pacific, are expected to return. But the question is, how early will those develop? Again, for us in Kansas, a La Nina can signal hotter and drier conditions in the fall, particularly the September-October timeframe. But if the La Nina doesn't materialize before November, that will lessen any kind of influence it would have on our fall weather.
And for this weekend, what can we expect here in the state?
For this weekend, we're expecting temperatures to rebound with highs in the 90s, lows in the upper 60s to low 70s. There are some chances of rain, but they are fairly uneven. And again, the quantitative precip forecast indicates even those that do see rain may not see as much as they would like.
That's K-State climatologist Mary Knapp. To stay up to date on the latest weather trends, check out the Kansas State University Mesonet page at mesonet.k-state.edu. And that'll do it for this edition of Agriculture Today. Eric is back next week. Until then, have a good weekend. I'm Jeff Wichman, and this is the K-State Radio Network.